So in your workshop description, you'll see that this 4-hour VIP workshop is designed to walk you through the most important aspects of operating QuickBooks, developing an accounting system, implementing tax strategies, and understanding the key components of financial literacy. What we're jumping right into now, once we get through this outline, will be session 1 on understanding financial literacy. So we're going to take about 30 minutes to cover the topic of understanding financial literacy. I'm going to break it down at least in bite-sized forms for the principles and the philosophies of financial literacy to be practical. And throughout the course of this first session or any session, if you have any questions, just lift your hand. I'll be more than happy to answer your question. But of course, once we get to the end of that session, I'm going to provide a 15-minute Q&A break to give you an opportunity to ask questions, get some answers, give some feedback on what we've covered during that session. And of course, you have an opportunity to go out and get some refreshments, and then we'll return to our next session. And so session 2 is going to be on the components of accounting. Session 3 is going to be on creative tax strategies. And then our 4th and final session, which is going to be the longest session, which will run about an hour and a half, is going to be on the power of QuickBooks. So that's where we're going to take everything we've learned with regard to financial literacy, everything we've learned with regard to the components of accounting and the creative tax strategies, and we're going to strategically and practically integrate them into our understanding of QuickBooks. All right, everybody's with me on that? Yep. Okay, so let's go to our first page in our workshop. And session 1 is on understanding financial literacy. Understanding financial literacy. So what is financial literacy? Financial literacy is understanding the economic process of how money is made or converted into cash. That's what making money means. How money is managed or stored for investing, and how money is multiplied or invested for wealth building. So simply speaking, when you have an understanding of financial literacy, that means you simply have an understanding of the economic process for how money is made, how money is managed, how money is multiplied. And that's what one of my goals is today, to take you from the information and intelligence level of understanding those words into the mathematics and the metrics level, to not only understanding them intellectually, but being able to see what they look like mathematically. That's where the light is going to come on for all of you. But fundamentally speaking, that's what financial literacy is. It is understanding this economic process for how money is made, managed, and multiplied. This economic process includes the oversight, creation, and ongoing education of money, credit, assets, liabilities, banking, business, investments, wealth building, and all other aspects that make up economic systems. So let's do a quick review. Financial literacy is understanding the what? 2 words, the what? The economic process. So outside of how money is made, outside of how money is managed, and outside of how money is multiplied, financial literacy rests on what 2 words? Understanding the economic process. So that's what we have to have an understanding of. If we're going to become financially literate, if we're going to be lit in our money, if we're going to not only know how to get the bag, but keep the bag and multiply the bag, we need to know, or more properly speaking, have a great understanding of this thing called economic processes. So this economic process includes 3 specific things. It includes oversight. So guess what oversight means? You got to look over it. You can't employ someone or deploy that responsibility to someone. You have to be responsible for the oversight. You have to be responsible for the creation. This is a part of you putting yourself in a position to at least become creative enough in these areas that make up the economic process. But you also have to be responsible for the ongoing education. So to summarize those three things that this economic process includes of oversight, creation, and education, being here today, participating in this workshop today reflects that, because you're taking responsibility to oversee your own financial life. You're taking responsibility to oversee probably the most important aspect of your business operation. So this economic process includes the oversight, creation, and education of all of these things. Now that's very important, because as we dig deep into these sessions, one of the things I want you to realize is money is going to be made. Money is going to be managed. Money is going to be multiplied the more you increase your understanding of financial literacy, but it's not gonna just require or take money in order to do that. Because now that you have an understanding of what an economic process is and what it includes, you're now able to gravitate to other resources other than money in order to make, manage, and multiply money. So there's an adage that says it takes money to make money. Not necessarily. More realistically speaking, it takes financial literacy to make money. Or let's go a little deeper. It takes understanding what an economic process for making money, managing money, and multiplying money is. Let's go a little deeper. What does it take to make money? It takes being able to oversee, create, and be educated about money, about credit, about assets, about liabilities, about banking, about business, about investments, about wealth building, and about all other aspects that make up economic systems. That's another term you might want to underscore, highlight: economic systems. Because everything that we're talking about, whether it's about tax strategies, whether it's about accounting, whether it's about balance sheets, whether it's about cash flow, whether it's about your business, all of these things that we're talking about, I want you to visualize all of these things that are in one house, okay? All of you live somewhere, right? Okay, so you have one address, okay? That's one unit or one place you live in. But in that one house, you have a whole lot of rooms. You have a whole lot of fixtures. You have a whole lot of appliances. You have a whole lot of wires. You have a whole lot of plumbing pipes. You have a whole lot of dresser drawers. You have items in those drawers. You have food and inventory and products in those cabinets and pantries. You see what I mean? And then you've designated or compartmentalized certain areas within that house to identify with what is most important, what area is the most active area. Am I correct with that? Yeah. Well, economic systems, or your economy is your financial house. Your economy is your wealth building house. And so in order for you to become economically strong, you've got to build the house with all of these different components. So it doesn't just take money to build your house. It takes credit. It takes assets. It takes liabilities, understanding how they work, banking, business, investments, wealth building. So even if you don't have a desire to own a business or run the day-to-day operations of a business, in order for you to be economically successful, in order for you to build wealth, in order for you to really get the bag, or more properly speaking, in order for you to really be successful in making money, managing money, and multiplying money, you've got to have all those things working cohesively together. You got to have a financial or economic house so good put together that when you enter into it, you know where the kitchen is, you know where the living room is. You can go in the kitchen, you know what drawer has your utensils, you know what drawer has your pots and pans, you know what's in the pantry, you know what's in the refrigerator, you know where the oven is. it's the same way. So when you need certain things to happen in order to make new money, or in order to manage that money that you've made, or in order to take the money that you've managed and multiplied it, you're able to go into the right room and say, oh, it's going to take this. If not, you'll be beating a dead horse. You ever notice how sometimes you can get in this rabbit trail of, oh, I just got to get my credit together. But you're not focusing on income. Or you focus on income, but you're not focusing on leverage. Or you got liabilities that you think are assets and assets that you think are liabilities. Or you don't really understand banking. So when you bring all of those together and you get that understanding and you take that understanding from intelligence to mathematics, which means every time you see these words, you don't see words, you see what? Numbers. Once you convert those words into numbers, guess what you are? Anybody knows? Guess what you are?
Financially literate.
You are financially literate. You are financially literate. You are financially literate. You can be intelligent with regard to financial literacy, but not necessarily practical with it because you haven't converted that information into mathematics. Does that make sense?
Very good breakdown.
So we all understand what financial literacy is, correct?
Yes.
All right. So what does financial literacy require? Well, financial literacy requires a fundamental understanding, to my point, of math, metrics, numbers, and statements, not just words, sentences, information, and ideas. Listen, ladies and gentlemen, this was one of the biggest hangups I had for years because I had a lot of intelligence when it came to financial literacy, but I didn't have the math. I never converted that intelligence into math. The moment I was able to convert that intelligence to math, it pushed me not to more information when I found myself at a roadblock or a stall economically. It pushed me to the calculator. So when you're starting to strategize for your business and it keeps pushing you to a pen and paper and not a calculator, what that's telling you is your financial literacy hasn't kicked in.
Gotcha.
Because financial literacy doesn't require pen and paper. That makes sense? Financial literacy requires what? Calculator. Most of you know when you sit down with me, it's like, it's a default mode for me because I've done it so religiously and obsessively for so long. If we're having a conversation and you're saying something and you start throwing ideas out and we start talking the language of money or sales or prices, the first thing I'm going to do while I'm scribbling, of course, is get a calculator because I know my brain has been wired to understand that it will not make sense if it don't make, come on, y'all from the hood. If it don't make dollars, it don't make sense. That's a hood slang term, right? So if I'm not able to mathematically calculate what I'm talking about, with regard to making money, managing money, multiplying money, that means it's not making dollars. That means it's not going to make sense. But I want you to kind of like put a remix on the word dollars, and I want you to look at it as numbers. If I can't create a numerical value for what I'm talking about, it's not going to make sense, which means it's not going to perpetuate my belief about financial literacy. Pretty good?
Yes.
So it requires a fundamental understanding of math. That should be one of the most important and most regularly used apps that you have on your device. And that is your calculator, because it requires a fundamental understanding of math, of metrics, numbers, and statements, not just words, sentences, information, and ideas. So when you look at your business plan, when you look at some of the strategies that you're putting together, when you look at your goals, when you look at your products and your services, when you look at the next steps that you're prepared to take financially in your business, if you see more words than numbers, that's telling you something. You should see more numbers to some extent than words, because what banks are going to look at is numbers. They're not going to look at words. You're a lender. You know what I'm saying? So they can put this whole package together. They can present it to you. All the language is great. They went to a notary, got it notarized. They have the best handwriting. I mean, they just put it together. It's cold, but you'll skip through some of that data. Let's look at the numbers. Let me see your tax returns. In other words, let me see them numbers. Let me see your bank statements. Let me see your profits and loss. Let me see your balance sheet. Let me see your general ledger. Everybody's going to put, everybody that's in the financial arena, everybody that specializes in understanding numbers will push you to those numbers. So we as entrepreneurs, as financiers of our families and our legacies, we've got to do the same thing that they're doing. Okay? So how does financial literacy work? Well, financial literacy works through strategies, through structures and systems that provide an efficient and effective way of implementation. This is how financial literacy works. So you understand what financial literacy is. It's understanding this economic process. So I can learn how to become a master at making money, managing money, and multiplying money. But in order for me to do this as a successful master, I've got to understand math, metrics, numbers, and statements. And so once I have an understanding of those numerical values, then I have to push that understanding into strategies, structures, and systems. Let me give an example. I shouldn't be using like this general ledger to manage and monitor the day-to-day operations. This is the whole reason why we're having this VIP workshop, to lead you to the promised land of QuickBooks. Because the promised land of QuickBooks or an accounting system is going to systematize what all you know about financial literacy. Because you just can't keep that in your head and just tap it every day on a calculator. And in 2021, I would go as far as to say, you shouldn't just be using Excel spreadsheets. One of the reasons why I'm saying that is because although that has worked for years, we're in a technological digital world that is so interconnected to other systems that it still slows your money-making process down if you don't integrate it in those strategies I'm referring to, into structures and systems that move at paces that you can never move at. That's how you scale. That's how you accelerate. That's how you keep making, because remember, financial literacy is a part of making money, right? So you get the money, you make it. Then you got to manage the money, right? Then when you manage money, what's the other part of financial literacy? You got to multiply. That means you got to put your money in a system or in a structure, and you got to let your money move at a pace faster than you, faster than inflation, faster than your debt, your liabilities. It's got to move. And it won't move if it's not put in an infrastructure or a system to do that. Okay? So let's take a look at the ABCs of financial literacy. The ABCs of financial literacy describe the basics of A, accounting, B, balance sheets, and C, cash flow. These three components provide a comprehensive support system for making, managing, and multiplying your income. So if you followed me so far, just in the few segments of this session, you'll see that once we land to how financial literacy works with strategies, structures, and systems, now it pushes us into this concentrated world, this consolidated world of A, B, and C. Are you with me on that? Accounting, balance sheets, and cash flow. Because if you're still up at the top of the economic process, you're going to get lost, because it's like, how am I understand banking? How am I understand liabilities, assets? How am I understand investments? How I'm going to understand money and credit? And although it's too much, you gotta concentrate that and consolidate that down into, number one, mathematics. And then when you push it down into strategies and structures and systems, you're going to pop out with this ABC: accounting, balance sheets, and cash flow. That's what we're working with. Now, a lot of those sophisticated things, a lot of those technological things that experts and people that you should at some point have in your credibility kit, like CPAs, accountants, tax strategists, bookkeepers, all of those sophisticated nuances are going to be interconnected to that world of economics, to that house, but it's no different than you walking in your house. Every time you walk in your house, there are certain rooms that are most frequently used, right? So if you could name like the 1 or 2 or 3 rooms that are most frequently used: your kitchen, your bedroom, and the bathroom, right? Let's just say. So that should be like the ABCs of financial literacy. So as long as my kitchen clean, my bedroom clean, and my bathroom clean, I'm not even going into the kids' room all the time. You know, it's just a lot of things that you're not even paying attention to until you pay attention to it, until you need to, right? Until you're at the store, let's say, and you see a chair that you love or some pillows. Now what you start thinking about, the living room. Oh, that looks so good. But up until that point, you weren't thinking about it. You just think about what I'm about today to put in the refrigerator. Or do I have toothpaste? You know, or do I need some soap? Because these are your regularly active rooms, right? So you want to look at the ABCs of financial literacy. So if I can wrap my mind around accounting, the fundamentals of accounting, if I can wrap my mind around balance sheets, at least to be able to look at one and read it and understand it enough to make a educated decision with numbers, if I can wrap my mind around cash flow, the concept of cash flow and how critical it is, I'm gonna be good. Because all that other stuff is important, but all that other stuff ain't gonna mean nothing if you don't understand those 3. Does that make sense?
Yep.
I know I'm pushing through, so any questions so far, or we're all on the same page? You got it? Okay, so we have the A for accounting, the B for balance sheets, and the C for cash flow. These are the 3 components that provide this comprehensive support system. So now we want to create a support system. We want to make sure that we have infrastructures that are working. We want to make sure that when we do introduce what we know to certain systems, when we integrate what we're doing into certain systems, we want to make sure that it's concentrated enough, that it's condensed enough, that we don't get lost, that we don't get discouraged. And I'm talking to you as a financial civilian, okay? So, because I'm not a tax strategist, I'm not a CPA, I'm not licensed or certified for none of the stuff that I'm talking about. However, when I have conversations with people who are licensed and professionals, and this is what their businesses are built around, I understand their language, they understand my language, and the nuances of language and wording and communication and intelligence that they provide for me is not so far away from me because I'm in the ecosystem. So I ain't the professional, but I know enough about my profession and how important this lane is to my profession that when I speak to a professional, they at least know, okay, you've done your due diligence. So that's what the ABCs is about. You knowing enough to do your due diligence on a daily basis. This is one of the biggest hangups a lot of entrepreneurs have, because most of you know, because I did it with the first 2 or 3 CPAs that I had. You go to them, you do it with lawyers, you do it with all professionals. You go to them assuming that they're gonna educate you, assuming that they're gonna show you how to run your business. But they're so professional, they are so sophisticated in what they do because they've been trained and programmed to be experts and professionals. They're only gonna take what you give them and they're gonna do their job. So if you've ever had that experience where the tax person told you, oh, you owe tax, and you like, how I owe taxes? Well, you this, that, and the other, you didn't have this. And then the next thing in your mind, you might not say it is, why you didn't tell me that? Like, why you didn't show me that last June when I made that 10 grand or when I didn't deduct that? And now you're telling me because it wasn't their job to run your business. It was their job to provide a service for you based on the data and the information that you presented to them. They ain't doing all of that for you. They're gonna ask you some general questions, right? You know, how much you got, what you do you use this? You gotta know this stuff. I learned that like with the first 2 or 3 CPAs. So let's look at these 3 components, and then we're gonna take a quick break, give you an opportunity to get some refreshments for 15 minutes. And for those of you that are even on the live, if you have any questions after we cover these 3 components of the ABCs, feel free to drop the question in the chat, and I'll take that 15-minute window to answer any questions or to give you some feedback on anything that you got on your mind. So the A is accounting. What is accounting? Accounting describes the ongoing management of all personal and all professional financial matters. The ongoing management. Y'all know good and well, you cannot manage your personal and your professional business or ministry or both. You cannot manage all of those financial matters on paper with pens. You can't manage it in compositions or 3-ring binders. You can't manage it with spreadsheets because you're not a CPA. You're gonna do something wrong. There are systems that technology provides us that does a lot of this work for us, which is why we slide in the home plate with QuickBooks, but you still have to be, I love what Pastor said the other day. That was so good. You still have to be committed, but your commitment is tied to your conviction. That was so good. I'm like, oh, I'm gonna steal that. Your conviction is tied to so you have to be convicted or convinced enough that, no, I have to do this. Because what's gonna happen, and if you have an accounting system, you might have experienced this, you get lazy, you get tired, you get overwhelmed, and then you go back and then you got like 600 transactions. And then you're just gonna give up because you don't wanna reconcile all of them. Or some of you, let's say you're in June and you're just starting, now you're gonna have to go all the way back to January 1, and you have to reconcile income and expenses up to June to make sure that you ain't hit across your head next year. But that's the price you pay without systems. But once you get it lined up, you still have to have a conviction that I have to stay on top of this, because like for me, and most of you are very similar to me in that you're prophetic, you're extremely creative, you're probably obsessive with your drive and desire and aspiration and ambition to really be great, meaning that every little thing that happens in your brain or in your mind debilitates you, and it hinders you. It suffocates your creativity. So let me give an example. My wife is very detailed. Like, she knows everything in every account, right? And to the penny, you know, like the other week I mentioned it on our show. The other week, I must have did some transaction over the phone, right? And I remember them saying it, but I just don't pay attention to those details. I was like, I gave them the card. I was like, whatever. In my mind, whatever the cost was already came out. So they was like, well, we're going to do a hit. You know how they hit your account with like a 10-cent transaction or something? But I just totally forgot about it. I just registered in my brain that dollar amount was gone. So like 2 days later, because we start our days like that every day, my wife and I, 7 days a week, like 2 days later, she was like, honey, what was this 10-cent transaction? And I'm like, now you petty crocker, for real, for real. Like, for real, for real. 10-cent transaction. But here's my point. Even though I miss all of that, I still want to know what we got. I want to know what we spending, what we got. I just want to know that ultimate number. And she knows I'm so like extra with it. I don't want it once my day gets started, because I feel like I already lost. I want it before my day start. And here's why. Some of you the same way, because now I can become creative. If I know I got this much, and I know I got this much going on, and I need this much, now my creativity can open up. It's going to change the way I move today. If I know I need $1,000, or if I know I spent $8,000 that I didn't expect to spend. I'm like, yeah, I need that back. Plus 8 more. Somebody gonna get, I'm getting some get back for that. That was a hit. But my creativity is connected to me having that data. So you have to be on top of that as well with your accounting system. Make sense?
Yeah.
So it describes the ongoing management of all your personal and financial matters. This includes all 7 components of financial planning, and we're going to get through all those in our next session. Financial planning, income and expense tracking, taxes, banking, risk management, investing, and retirement. So we'll cover those 7 components. I didn't want to go into them now because I knew it was going to take probably about 30 minutes for us to get to this point. So that is the A of the ABCs of financial literacy. Everybody with me on that? The B is balance sheets. What are balance sheets? These are statements of your financial position that report your assets, your liabilities, and ultimately reveal your financial net worth. Now, for those of you that are on the blueprint and you may have gone through the Entrepreneur's Guide to Business, this is a little different than the valuation of your business, because there are companies that will valuate your business, and the valuation of your business will basically reveal what your business is worth in the event you liquidated it, put it on the market, and sold it, because they're actually business brokers that do that. They sell businesses like they sell cars, like people sell cars and sell real estate. So a valuation is different. Although it involves your balance sheets, it's not the same. So I don't want you to get it mixed up. Your balance sheets are your statements that are going to help show you what your financial position is. And it's going to be based on your assets, liabilities, so you can see what you or what your business net worth is. So your assets, I just simplified it because I'm not getting into great detail with balance sheets and cash flow. That's going to be for another workshop. But I want to at least give you enough so that you can have a conviction. Some people are not going to give you this version of a balance sheet. Well, let me just say it this way. Broke people or middle-class people don't use this version. The only people that use this version of balance sheets are people who rich. So you could choose which version you want. I'm going with the rich version. You know, broke and middle class just doesn't work. I tried both of those. Okay, so your assets are what? Things that flow money to you. You see that? Here's a quick hook so you can see how big of a difference it is. Middle class America classifies a house that you own as an asset. Rich people, oh, let me move rich people out the way. The bank that gave you the loan to buy the house see it as an asset. It's an asset to them because it's on their asset column, on their balance sheet. It's a liability to you because it's not doing what?
Bringing in money.
It's not flowing money to you. So if you can just register that in your mind, you're going to, like, for example, you can have a Rolex watch or some type of piece of jewelry and you're like, oh, I got that asset. Well, not necessarily. It has value, but it doesn't flow. Like, is that watch paying you every month? You get what I'm saying? It's not an asset. Well, my car's an asset because it take me to work. No, boo, it's a liability. It's just a liability that takes you to work to make money. But you're working for the liability of that note. Got it? So your assets are things that flow money to you. Your liabilities are things that flow money from you. If you just simplify that type of balance sheet to say, I got to make sure, this is so critical, even with your business. I got to make sure that with all the income that I have coming into my life and all the revenue that I have coming into my business, I've got to figure out the best way to make sure that almost every purchase I make can lean towards that asset column. I want it to flow money to me. And at the very least, when it's in the liability column, it needs to be in the liability column because it is connected to a deduction. Anything else, you just goofing off. You're not going to build no successful business. So your assets are things that flow money to you. Your liabilities are things that flow money from you. And your net worth is the total value of your assets minus the total value of your liabilities. Example number one. Okay, you got $100,000 worth of assets. You got $300,000 worth of liabilities. Your net worth is minus 200 grand. See that? Okay. You got $500 in the bank, 500 hot dollars, but you got $60,000 worth of debt. Your net worth is negative 55,000. See that? Or you got $1,000 in the bank and you ain't got no debt. But all of this is going to play a role in your accounting, because when we get into those components, one of those components is financial planning. That's why when you're trying to build a business, I've said this to all of you entrepreneurs that I've had an opportunity to talk to. When you're planning, when a part of your financial plan is to build a business, you've got to take into consideration every purchase you make, every major decision you make with your cars, with your living conditions, with your family. All of that has to be a part of your financial plan, because that's going to determine the speed at which your business moves to a place of sustainability. Make sense?
Yes.
All right. The last component of this is cash flow. Cash flow describes the net amount of liquid money you have left after your income and expenses. See, cash is not king. Cash flow is king. And let's just say we go with the old adage that cash is king because it just sounds good. It's easier to say. Well, if cash is king, cash flow is the kingdom. So however we want to put it, cash is not more important than cash flow. All right. We want cash flow. Cash flow describes the net amount of liquid money you have left after your income and expenses. And it also reflects the cash component of your net worth. Everybody got that? Mm-hmm. Any questions on that? Got a good class today. All right. Those of you that are live online, do you have any questions? If not, we're going to just take a few minutes, give you an opportunity to get some refreshments. And I'm going to stand right here and just wait for y'all to come back and get situated. We have some refreshments outside of the boardroom. Go ahead. Feel free to pick up some.
No questions there.
Okay. So several weeks ago, I approached my team and I informed them that I'm going to be taking my signature 90-day business coaching program. What a bright idea. And I'm going to make it available to everybody in 2021 for an entire year. Here's the kicker, but for the same price as our 90-day business coaching program. Now, of course, my team was like, you're doing what? You already have clients in your 90-day business coaching program and they're already getting results. You got testimonies. Things are happening for them. Why are you actually doing this for a year for the same price as a 90-day business coaching program? Well, for me, not just as a business owner or coach, but as an individual who understands how hard it is to really start, structure, and scale a successful business, I wanted to make my professional business coaching program available to people like you that may have never had an opportunity to experience what true professional business coaching is all about. Listen, I am not just a business coach and a consultant, but I am a business coach and consultant consumer, meaning that I'm on business coaching and consulting programs myself. I have some of the greatest people in my life that I actually pay to help me continue to scale my organizational enterprise. And I know what type of impact it's had on me personally. I know what type of impact it's had on me professionally. Now, to their surprise, it wasn't to my surprise, but to their surprise, once I launched this 1-year business coaching program, we exceeded our initial goal probably by 2 to 3 times. And so today I want to make it available to you. Perhaps you're at a place in your life personally. You might be at a place in your life financially or even professionally where you just can't quite figure out what are the roadblocks, what are the hindrances, what are the things that you might not be able to see as blind spots that are keeping you from properly scaling your business, your income streams, or even your wealth building dreams.